Hey everybody, it's John King. It is Friday, the 2nd of February. First full month of 2024 is behind us. The first Federal Reserve meeting is behind us, and the second jobs report of the year is now behind us. And we have a lot to talk about with this week's market update. So as a reminder, I do these every single Friday, give you an update on what's happening with the market, get you ready heading into the weekend, whether you're a buyer that's looking to buy homes and wants to get updated information about how the market is doing, or you are an industry professional that's about to go out and work with your buyers. I want to make sure you're prepared with the most accurate information you can heading into the weekend. So first and foremost, Wednesday, the Federal Reserve met. They met on Tuesday and Wednesday. They meet every 6 weeks. So they met on Tuesday and Wednesday. They did an announcement on Wednesday, and they basically admitted we are going to start lowering interest rates. But then they said, we just don't know when. We're not going to do it anytime soon. Don't expect us to lower rates in March. And so the market loved it. The market is happy because the Fed finally admitted that rates should come down and that they're going to lower interest rates this year. So that was really, really, really good news. And it pushed the markets. The mortgage market, we had the best rates yesterday on Thursday that we've seen in a month. So rates responded very, very well. The stock market responded very, very well. But the Fed said something really, really critical. The Fed said, hey, we're going to pay really close attention to employment. Employment is the thing that we are most concerned about because it's going so strong. And so I want to recap again why that's such a big deal, because inflation has been the major issue. And inflation went up for lots of reasons, but the number one reason that inflation went up is the pandemic, and people had a bunch of money coming in that they spent, and they spent it buying goods and services, and the price of those goods and services went up. Well, now the inflation is coming back down. It's back in line to where it should be. Everybody is happy. And the Fed says, no, hold on. Because if people are, if there's a lot of hiring, if people are working more and getting pay raises and getting better jobs, they're going to have more money to spend, which means they're going to spend that money and the prices of stuff is going to go back up again. So they made a mistake 2 years ago in saying inflation was temporary. Now they're saying, well, this whole reduction in inflation, we're afraid it might be temporary. Kind of feels like they have a temporary challenge mentally in looking at the tea leaves like the rest of us are. But hey, maybe they're right. I don't know. Here's why it matters. Because this morning, the jobs report came out. The jobs report is an estimation of how many jobs were created in the prior month. Now, mind you, it's February 2nd, and they're trying to figure out how many jobs were created in the month of January. And they do some seasonal adjustments because, hey, some people were laid off in January because they were holiday staff working at the mall. And so those people, well, they adjust for them and say, well, yeah, that doesn't really count. And so we're going to ignore that. Fine. But what they expected, what the market expected was 180,000 jobs created. And we're kind of hoping it would be a little bit less than that, because that means that the Fed doesn't have to worry about inflation coming back because employment is stable. We had a breakout jobs report. Almost double the number of jobs were created. 358,000 jobs, I think. 353,000 jobs were created in January. Almost double the 180,000 we expected. Now you'd think, well, that's really good news, John, because people are creating jobs. It is good news, but it means that there's worry in the Fed's eyes that inflation is going to come right back. And so it's going to create more concern about whether the Fed is really going to lower rates as quickly as we hope. There's an argument before today that said the Fed's going to lower rates in March. They're just not telling us. Well, now there's almost no chance the Fed is lowering rates in March. And that caused interest rates to go up today. So the most important lesson that I want you to understand is the Fed, when they raise or lower interest rates, does not cause mortgage rates to go up or down. We're predicting right now what we think the Fed is going to do. And so if everybody's convinced the Fed is going to lower interest rates go down early before the Fed's announcement in anticipation of what the Fed's going to do. And then if the tea leaves say something different, we think, well, no, the Fed's not going to actually lower interest rates as quickly as we thought. Rates will pop up again. So this morning we saw interest rates go up. I will tell you that the Fed made it clear what they care about most is jobs, and the jobs report only comes out once a month. And so when jobs is most important, the mantra is, as the jobs report goes, so do interest rates for that month. So the jobs report at the beginning of February is bad news for mortgages. I kind of feel like we're going to be stuck in a rut of bad news for mortgages when it comes to interest rates for the month of February, because even though there's weekly jobs reports, they're not as important as the monthly one. And the monthly one doesn't come out until the first Friday of March. So, and actually March might be the second Friday, because I think the Friday is the 1st of March, and I don't believe they can get the numbers out that quickly. Anyway, sometimes when the first of the month is on a Friday, they punt it to the next week. Bottom line, I'm a little nervous about where interest rates are going to go in the next 30 days. I still think we're going to see much lower interest rates this year, but rates have pushed down to the mid to low sixes. I think we're going to see them back in the mid to high sixes, maybe tickling 7% over the next 30 days. Again, in predicting the future, hard to predict the future accurately, right? All right, changing subjects. Last thing I want to cover on today's video is the number one mistake that self-employed people are making when filing their tax returns in order to qualify for a mortgage. So let me paint the picture for you. You are self-employed. It is now February of 2024, and you're preparing to file your taxes for the year of 2023. And as my dad, who was a tax preparer, always said, you can't win with the IRS and win with the bank or the mortgage company, because guess what? The federal government runs both. Ultimately, the federal government runs the IRS, and the federal government runs the mortgage banking through Fannie Mae and Freddie Mac and FHA and VA. And you can't win with both of them, because if you show low profit on your taxes, you win with the IRS, because you're not paying as much money in tax to your silent partner, Uncle Sam. But then you go to get a mortgage and you don't win because you don't have the income the government wants you to see on your taxes. We have to look at that. So many people every single year say, I'm going to buy a house this year. I'm going to refinance my house this year. And so I'm going to show a greater amount of profit this year in order to qualify for that mortgage, which means you're paying more money to the IRS than you otherwise would have by maybe not showing as many expenses as you otherwise would have shown. Well, that's great. And that may get you to qualify for the mortgage. But guess what? You have a huge tax bill. If you added $60,000 in profit, and there's some people that we have to add $60,000 in profit to what they were going to show or what they showed the prior year in order to qualify for a mortgage, you're paying probably an extra $20,000 in tax to the IRS, which means you either have to write a check for 20 grand or you have to come up with a monthly payment to pay the IRS. And so you'd rather pay a monthly payment to the IRS than to have a little bit higher monthly payment on your mortgage. That doesn't make a lot of sense. Now, John, why are you saying I'd have a higher monthly payment on my mortgage? Because the number one mistake people are making is ignoring alternative programs that allow you to qualify without looking at your tax returns. Right. There are programs that allow you to qualify without looking at your tax returns, but they come with higher interest rates. Now, you already tuned out. You're like, John, you lost me at high interest rates. Why do I want to pay a high interest rate for the next 30 years? Let's think about this for a second. First of all, it's only a small bump in your monthly payments. Secondly, you get a tax write-off because interest is tax deductible. And so instead of giving the IRS extra money and not having as big of a write-off, so you're going to end up owing them even more money over time, you pay a little bit higher interest on your mortgage, and you get to write that off on your taxes. So now you save even more money on the tax side, okay? And so when you look at these options, you realize that the final piece of this is you're not going to keep this mortgage for 30 years because we're at the high end of the rate cycle. Interest rates have been super high for the last 2 years. And I just finished telling you why rates are going to come down this year, and they are. Now, I don't know how low and I don't know how quick, but the Fed's made it clear we agree rates are coming down this year. So if you're doing something this year, we're going to see rates drop this year. We're going to see rates drop next year. We're going to see a downward trend. Now, you got to worry about whether you wait too long to buy a house and the price goes up. I'll cover that in just a quick second. But the fact of the matter is, your biggest mistake is saying, hey, I want to make sure I get the lowest possible rate on my 30-year mortgage, when the truth is you're going to refinance it in a couple of years and you're going to have to show higher profit in a couple of years anyway to qualify for that loan at the lower rate. It doesn't make sense. So if you're looking to buy a home, if you are self-employed, you need to talk to me, because in about 60 to 70% of the cases, you are better off paying a higher interest rate on the mortgage. And maybe I use your P&L to prove how much income you're getting. Maybe I'm using your bank statements to prove how much income you're getting. Maybe I don't even need to prove your income because you're buying a rental property and I simply use the rents from that rental property to prove the income you're getting. Now, in about 30 to 40% of the cases, it makes sense to file a tax return with higher profit. But allow me to help guide you through that and make sure if you do go down that road that you show me the tax return before it's filed. Because as soon as you file it, yeah, you can amend it, but we see the original version and the amended version, and we don't believe the changes 9 times out of 10. So show me before you file so that I can at least advise you and say, hey, you just bumped it up by 60 grand, but you needed to bump it up by 70 to qualify. And so you're about to pay taxes on $60,000 and you're still not going to accomplish your goal of buying a home. How tragic would that be? All right. Final thing really quick is just a reminder of basic supply and demand economics. There are not enough homes for sale in this market, yet more and more buyers are coming back to buy as interest rates are coming down. So when that happens, prices are going to go up and we're already seeing it. So if you're saying, John, rates are going to drop, you've made it clear rates are going to drop, I want to buy at a lower price, a lower interest rate and have a lower monthly payment, and I want to wait. That's great, except that it's going to cost you in a higher purchase price, and you have to decide if the trade-off is worth it. So the best way to decide is to get a hold of me. There'll be a link down below that you can use to join me on set up a call. You'll be able to see my calendar. We'll make sure you get that link. And if you have any questions, please feel free to reach out to me directly. Hope you have an absolutely wonderful weekend, and we'll talk to y'all soon. Bye-bye.